What is going on, my good people? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to be doing a stock analysis on a very highly suggested stock, and this one is AT&T. Ticker symbol is T. Now, I'm sure you guys have seen a lot of stock analysis and reviews on this one recently because of the merger that they are trying to complete by 2022. But I think I have a little bit of a different perspective than most people. So I really am going to dive in here and tell you exactly why I am still putting money into AT&T and why I'm so confident in the growth of this company. But if you guys are hyped for this video, please make sure you smash that like button. I really do appreciate it. It really helps out the channel. If you guys are interested in any of the links down in the description, it does also support the channel and you get some free stuff out of it. So it's a win-win. I appreciate that. Also, join the family. Hit that subscribe button down below. Really trying to build this channel up. We are going to be pumping out a ton of content. So make sure you guys are in for that. But with enough talk, let's get started. AT&T is a holding company which engages in the provision of telecommunications, media, and technology service. It operates through the following segments: communications, Warner Media, and Latin America. The communications segment provides service to businesses in U.S. territories. The Warner Media segment develops, produces, and distributes feature films, television, gaming, and other content. Okay, so now let's hop right into the numbers and see why AT&T is at an extreme discount, in my opinion. We're going to be looking at the current dividend. We're going to be looking at their financials, seeing if they can even afford this dividend. But let's hop right into it. So over the past 5 years, their revenues from 2016 was $163 billion. Now in 2020, they recorded $171 billion. So not much growth there, a little bit of growth, but nothing to break home about. I'm not too excited about that kind of growth. Now, let's hop right in and see their current dividends and what they are paying out. So AT&T does pay out a yield of about 7.67%. This is a very high dividend yield. They are going to be cutting it, which is why a lot of people are selling off the stock. The annual payout is $2.08 per share. A pretty healthy payout ratio of under 65%. Their 5-year dividend growth rate is 1.72%. Not the best, not the worst. They have dividend growth for 37 past years, which will be ruined next year when they do cut it. But they do pay 4 times per year. They pay a quarterly dividend. So not too shabby about that. Now hopping right into more of the business and the financials behind the business. So they are almost at a $200 billion market cap, sitting out about $193 billion or so at the current market cap. They have a price to cash flow ratio of 4.5, which is pretty healthy in my opinion. Gross profit margin of almost 52%. The revenue, like I said, $176 billion. They have $12 billion of total cash, and their long-term debt is a whopping $155 billion, which is just ridiculous. Too much long-term debt, and that is one of the reasons why the share price has been really decreasing. But it looks like they are trying to tackle that problem with their dividend cut, that is coming next year. They look to be trying to get into and cut some of that long-term debt. Okay, so now we will hop right into the merger, what everyone wants to talk about, and the future of this company. So, telecom giant AT&T announced earlier this year to combine its content unit with Warner Media, with Discovery, paving the way for one of Hollywood's biggest studios to compete with media giants Netflix and Disney. Under the agreement, AT&T will unwind its $85 billion acquisition of Time Warner, which closed just under 3 years ago, and form a new media company with Discovery. The deal would create a new business separate from AT&T that could be valued as much as $150 billion, including debt. AT&T said it would receive an aggregate amount of $43 billion in combination of cash, debt, and Warner Media's retention of certain debt. AT&T shareholders would receive stock representing 71% of the new company, while Discovery shareholders would own 29%, it added. If approved by regulators, the deal effectively reverses AT&T's years-long plan to combine content and distribution in a vertically integrated company. The company said the deal is expected to close in the middle of 2022. So, a lot of info there. What does this mean? So, as a shareholder of AT&T, I will be receiving new shares of this company. Now, I'm not sure exactly how many I'm going to get, even knowing how many shares of AT&T I have, but I will be receiving some shares, and I am very excited about receiving these shares because they're going to be competing with Netflix, with Disney Plus, and we saw how Disney Plus has taken off this year. I think even though the pandemic is over, yes, no one's staying at home as much anymore, I still think this will be one of the in the top 5 of streaming companies. You know, there's Amazon Prime, there's Apple Plus. This one will be in the top 5, if not the top 3, right behind Netflix and Disney, and I think it will challenge them. So, it's super exciting to combine such historic brands, world-class journalism, and iconic franchises under one roof and unlock so much value and opportunity. AT&T and Discovery's assets are better and more valuable together. The new firm's singular mission is to focus on telling the most amazing stories and have fun doing it. Now, if you do own AT&T stock right now, like they said, they pay almost an 8% dividend. That's going to get slashed in half. Almost in half. We're not exactly sure about how much, but we do think it will be probably about a 4% dividend or so, which is still pretty high. It's still probably in the top 20% of all S&P 500 dividend. So if you are a dividend stock investor and you cut AT&T out because of its low dividend that it's going to be offering, 4%, not a low dividend. And I think with the bonus of the extra new shares of this new company, that'll make for that up for that extra dividend that they did cut. I think it is great. Personally, AT&T will be able to pay down some of this long-term debt by cutting that dividend. Yes, they will lose shareholders in the process. They have lost shareholders in the process. But I think this is a short-term loss. I do believe in the company coming together and actually making this merger a huge thing and potentially making this new company one of the best streaming companies in the world. So the two companies already spend a combined $20 billion per year on content, putting them in the same realm as Netflix, which currently spends about $17 billion a year. In an interview Mondays on CBC, Squawk on the Street, he has a goal. Zaslav has a goal for his new company to reach up to 400 million streaming subscribers across the world, up from the 100 million subscribers the two separate companies have today. So that pretty much wraps up the whole merger. I personally do think this will be good for the company, and I am eating up these cheap shares. Right now, AT&T is still paying that almost 8% dividend. We don't know what's going to happen with this merger. It is very speculative. It is very risky. But personally, I think I'm very bullish on this company, and I do think they are going to make the right decisions to pay down this debt. I think this is a very bullish move on their part, in my opinion. A lot of people disagree with that because we have seen such a huge sell-off. A lot of people have been selling the AT&T stock. It is a lot of uncertainty, and which is why a lot of dividend investors are probably getting rid of it. They don't like the uncertainty. I think this will be very good for the company. So I am going to continue keeping and just piling up these shares while they're cheap. But that is just me. Let me know what you guys think about it. That's really all I have to say about this whole merger and AT&T as a company. Let me know what you guys thought about this video, about this stock analysis, and what you guys think about AT&T as a whole. Alright, so I hope you all enjoyed that stock analysis on AT&T, and let me know what you guys think about it. I know it is a very controversial stock at the moment, but let me know what you guys think about it down in the comments below. Also, let me know if you are holding it or selling it or buying it, whatever you are doing with it. Let me know, because I am very interested in hearing your opinions and your criticism. I really do take constructive criticism. I have been getting some. I really do appreciate that. But make sure you guys give me some more. But also, if you guys can, just smash the like button for all the work that goes into making these videos. I really do appreciate that. I will be definitely pumping out more content, so hit that subscribe button and turn your notification bell on. And I really appreciate you all for watching. I will see you in the next video. Peace!